Hey everyone, this is Susan Mattern with Long and Foster. Let's Open Doors in Westchester, Pennsylvania. I'm here with Ramsey Coulter with CoulterCredit.com. He is going to tell you a little bit how, as a first-time homebuyer, how you can get your credit better so that you can get a better interest rate and buy your first home. How are you doing today, Ramsey?
I'm doing great. Thanks for having me on. I appreciate it, and love doing first-time homebuyer classes. This is the new way to do them online, and so one of these days, eventually, we'll be able to do them in person again. But for now, this will do. So if you want to buy a house and you don't have a great credit score, right now, you need one. You need a much better score, more so now than ever, at least a 640, at least 640 plus, 660, 680. The higher it is, the better it is, of course. But some programs that go down to 580 just aren't really available right now through lenders. And if they are, they're really not good interest rates and they take forever. So credit's super important right now, more than ever. So how do you establish credit? If you have no credit, you need to open credit. And you might say, well, I tried. I applied for a secured credit card with my bank and they even denied me my own money. And so for those of you who don't know, a secured credit card is you give your bank a couple $100 and they give you a credit card. So however much you give them, that's what your limit is. Not all banks offer this, and like I just said, not all banks will approve you even for your own money. It doesn't make any sense. There's nothing they could lose. They have your money as a security deposit, but some banks deny you. So there are plenty of banks out there who will approve basically anybody as long as you have income. They will approve you. We have a list of them. You could email us, and we could give you that information. Ramsey, R-A-M-S-E-Y, at Coulter, C-O-U-L-T-E-R, credit.com. We give out that info for free all the time. How to build credit builder accounts. That's just free info. So having stuff that reports to all three credit bureaus, that's where you have to start. Because if you go to a buy here, pay here dealership and they don't report your car payment, which you should never go to a buy here, pay here dealership. But if you do, and they don't report it to the credit bureaus, you're not getting any credit for that, literally. You're not getting any credit, and you're paying a crazy high interest rate, and you probably bought a lemon. But anyway,
Right.
That's just my experience. Not my personal experience, but with seeing thousands of people's credit
Right.
and them complaining about.
And people think they're building credit and they're not, because I was in the car business for 16 years. So I totally know.
Yeah. And a lot of the small buy here, pay here dealers, the sign will say build your credit. Well, they only report to TransUnion. They only report to one credit bureau.
Right.
And so great. It benefits one, but you want a credit card that reports to all three. Most credit cards nowadays do. There's certain small banks or certain credit unions in Jersey that only report to one or two. Just don't do that. But having stuff that reports positive to your credit, because people will say, well, I pay all my bills. I pay my electric bill, my cable bill, my cell phone bill, my car insurance, my rent, whatever, internet, none of that helps build positive credit history for the most part. And it will hurt your credit if you don't pay those. They will show up in collections and damage your credit, but they don't give you, that positive on-time payment history. So getting accounts that reports the most important thing. So
one thing that you can say not to do, would it be not to max your credit cards out? And if you do have them paid down to, what's the percentage now?
Yeah, so that's number two. So the first thing is have credit, have stuff that reports on-time payment history. That's the number one most important thing for a credit score. It's 35%. 30% of your credit score is exactly what you were just talking about. So having a credit card is super important. How you use it is more important. Here's the answer. Barely use it. Don't really use it.
Right.
Use it for gas once a month and pay it in full. Every month, pay it every payday. I don't care if you get paid every week, pay it off every week. If you get paid every 2 weeks, pay it off. It's so much better. You don't want to pay interest if you don't have to. All credit cards are bad interest. Even the great ones that are 8% interest, that's still bad interest rate. And most credit cards are 18 to 28%.
Right.
So credit cards are just a building block. You don't want to have them. You got to be careful. You just got to be careful with credit cards. I've seen way too many people who come to us with $5,000, $10,000, $15,000, $20,000, $30,000+ in credit card debt, and we're not debt settlement. We don't tell you to stop paying all your credit cards and then collect a fee and then settle it later. Those companies destroy your credit. Yeah, they can get you a good deal. Well, you can get yourself a good deal. Just stop paying your credit cards and call them later and settle for less.
Right. Exactly. Yeah.
But we don't do that. And so that's something that's different. But
so is it good to have a mix like of store cards and major, or just have one major credit card or two major credit cards and just use those?
Ultimately, you want about 2 or 3 credit cards. You got to be careful. If you have a problem, just get one. That's okay. Barely use it. Never use it. I don't care. Use it once a year. That's fine. Just have one open. 2 to 3 credit cards is a good number, and one type of loan. If you have a student loan, that's a loan. You don't need any more. If you have a car loan, that's a loan. You don't need any more. If you have a personal loan, that's a $500 loan from your bank to help you build your credit. You don't need any more. Loans are not good for your credit. Loans do not really help you build credit that much. They do. They report on-time payment history. And sure, if you've had student loans open for 20 years, because that's usually how long it takes to pay them off,
right.
Of course, that helps your average age of credit. But loans are not great. And so people will call me and say, well, I just sold my house and I paid off a $400,000 house and my credit score dropped 5 points. I thought I was going to get 50 points because I just paid off almost $500,000. What's going on? Loans aren't great for your credit. That's what's going on. And
so it's better to pay those credit cards off and then pay the loans.
Yeah. And so I didn't answer your question. You want your credit card utilization or usage. The standard is 30%. So a $300 credit card, the standard would be keep it below $90. I tell people below 10%, especially when you want to buy a house. The lower the credit utilization, the higher your credit score. The higher your credit scores, the better your interest rate. So 10% or lower. And so that's credit usage. Length of history, I just touched on briefly. That is important. It's 15% of your credit score. There's not much you can do if you don't have a long credit history. The only thing you could do is if somebody else is going on the mortgage with you, if they have a credit card that's been open for a long time, they can add you as an authorized user,
right.
And you'll get 2 years of their on-time payment history. And if the card's been open since 1999, you'll get 21 years average age of credit. So that's 2 huge factors. That's 2 years of on-time payment history, which is the most important thing. You'll get their credit utilization, which could be good or bad. Depends how they use it. But if they barely use it, that's awesome. And then you get age of credit history. So an authorized user is a good way to boost your credit score. But when you're getting a mortgage, it has to be a friend or a family member or somebody who's going on the mortgage with you in certain cases. So, and then we already talked about mix of credit. A credit card's a credit card. So as far as your FICO score is concerned, it doesn't matter if it's a secured credit card, an unsecured credit card, a store card, a charge card. Any credit card counts for a credit card. A Kohl's credit card counts just the same
as a MasterCard and Visa,
yep, American Express,
American Express.
Yeah, you just don't get all the rewards, but
right.
Whatever. Yeah.
So on my last question is student loans. So basically you need to be paying those in order to get a mortgage, correct?
Well, yes. Unless you're on an income-based repayment plan where it's 0, which then if you go conventional, that's fine. But if you go FHA, they have to use 1%. So that's a big difference there. But yes, if you cannot be in collections with your student loans. Unless it's private, that's different. But federal student loans are guaranteed by the government. And if you want a government loan like FHA or USDA or VA, they're going to make sure you don't owe the government money. And it'll be a big red flag. It's called the Kavers report. And you will show up as being delinquent or behind on your student loans. And so to resolve that, in most cases, you do not need to pay a student loan debt relief company or whatever they portray themselves as.
Right.
You pick up the phone, you call the United States Department of Education, not Navient, not FedLoan, not Great Lakes, not whoever your loan was with, because they don't have it anymore. They sent it to the government. call the United States Department of Education, go on Google, type that in, you'll find their 800 number. I think it's like 800-864 or something like that. I almost have it memorized at this point, but you call them and get on a rehabilitation program. It takes about 6 to 9 months, and then you're in good standing, and then you make your regular payments. The rehab program is very, very low payments. $5, $20,
Right.
$50 if you owe $100,000.
Right,
Yeah.
right.
Yeah, it's very low. It's an affordable amount. It's to get you just used to paying your loans again because you haven't for so long. So,
right.
Yeah.
So again, first-time home buyers just need to have those 3 factors. Make sure that your student loans are being paid. You have that mix of credit, and everything's below that 30, more like 10%. So pay them down, and then watch out for the next episode, which actually is going to be our next episode is going to be with Sherry Hott with the Chester County Housing Partnership. And she'll go into the grant program, which you also have to have good credit for, correct? So your credit has to be, it has to be on the better side in order to get the grant program. So, so that's going to be our series. If you have any questions for me as far as buying a house, give Susan Mattern with Long & Foster, Let's Open Doors in Westchester, give a call. My number is 610-757-8792, or give Ramsey a call. Or you can reach him at CoulterCredit.com. Google his name, and he will come up. And I have a personal testimonial. I'm using him too, and my credit has gone up a lot since just listening to the little tidbits of information. And I think it's gone up, I don't know, like 40 or 50 points in 6 weeks. Yeah. So he's definitely the first person if you have any, dinged credit or marginal credit, and you need to jump up to that next level to get a mortgage. So thanks, Ramsey. I appreciate all your help, and I look forward to doing some more business with you. Thanks.
Awesome. Thank
all
you.
right. Have a great day.
Thanks, you too.